Hello and welcome to another webinar by CoinFirm, Eliminating Bad Actors in Crypto, KYC and Travel Rule. A big thank you to all those who are tuned in. My name is Rohit. I'm from the marketing team here at CoinFirm, and I will be your moderator today. Today we're joined by two fantastic guests, Keisha, who's the CEO at Authentic, and also Pele, who's the CEO and co-founder at Nota Bene. For those of you who are not familiar with CoinFirm, we are a global leader in RegTech for digital currencies, and we are a blockchain-based financial ecosystem. CoinFirm's risk management platform is used by governments, financial institutions, custodians, payment providers, investment funds, and exchanges. We have over 5,600 protocols supporting AML platform that utilizes 330 plus proprietary risk algorithms to provide a seamless, scalable solution to stringent regulatory requirements for both CeFi and DeFi. So let's begin. Guys, over to you, Keisha and Pele. Do you want to give a small intro about yourselves, please?
Yes, absolutely. Hi, everyone. My name is Katarzyna Kazimierczak-Mrowińska, in short, Kasia. That's why nobody could be able to say the full name. I'm the CEO of Authentic, and since January, we are a partner with CoinFirm. And I think what we are doing together, it's great because CoinFirm provides with AML solution on transactions. We provide with the KYC and AML on individuals. So we are like a perfect partners. And this webinar is, I would say, the first, but I hope not the last one that we will be doing together. Thank you so much for attending.
Thank you, Keisha. Pele?
Yes, hi, I'm Pele Brengard, the CEO, co-founder of Nota Bene. So we're also very happy to have partnered with CoinFirm, and we've been partnered for a while now. And we are very much focused on bringing identity data into the point of a transaction to verify counterparties to transactions. And our partnership with CoinFirm is very important to be able to do that.
Perfect. Thank you. Thank you so much, guys, for being here as well. I just want to kickstart off this webinar with maybe looking at the definition CDD, because you know, it's CDD often's mistaken because it has two meanings: customer due diligence and counterparty due diligence. And today, if you could maybe, Keisha, just tell us what customer due diligence is and how KYC kind of ties in with that. And then maybe Pele, what counterparty due diligence is and how travel rule ties in with that, please.
Absolutely. I start with the KYC, obviously, as we provide with the KYC. KYC, in short, is know your customers. But on the top of know your customer, you have a lot of other KYC. And know your users, know your business. We provide with the KYC, which is we are checking individuals, really. So with the honestly, starting with the simplest checks like a name, surname, date of birth, then to the further one like the document scan, then NFC scan, chip embed of the document. So they are different, I would say, level of the KYC. Of course, the basic one is to actually check if that person that provides or on board with the service, it's really the one that it's claiming to be. CDD is customer due diligence, so it's more for like a corporate one. The KYC is more for individual one.
Amazing, thank you. And Pele?
Yeah, so where KYC and CDD is around your customer, the travel rule is around your customer's counterparties or your counterparty. So when I say counterparty, someone who's a counterparty to a transaction. And there are a couple of different cases where this is important. So one is when you are sending funds on behalf of a customer to another exchange. That's when the travel rule comes in and helps you perform that counterparty due diligence or counterparty verification. And then there's another case where you're dealing with unhosted wallets where you yourself have to do that by tying your KYC information together with the blockchain address. So the travel rule is really a way for two exchanges to collaborate together. And then there's an additional counterparty verification step involved with the travel rule, because while the ultimate goal is to find out who your customer's counterparty is to a transaction, so you can run a sanction screen on them, etc., you need to be able to trust the counterparty exchange, which is often known as KYV, Know Your VASP. There are many KY, abbreviations in here, but it's very, very important to be able to trust the exchange on the other side, which is why this due diligence of the counterparty exchange comes in.
Yes, and if I would add that the KYC before it was out something more. Now it's not a luxury anymore. It's really applicable to all of those services around, and sooner or later it would be applicable even if the not regulated services, such as hopefully dating companies. So at least you know that you date who you really think that person would be, right? So some sort of the KYC, I hope it's gonna be shared across all of those industries, not only the regulated one. It's really important.
Amazing. Perfect. Thank you. Thank you so much for those very clear definitions. And in the current space, why would you say KYC and travel rule is, kind of the focus in the industry right now compared to how it was before, from both of you? What would you say, why is it so important now than what it was before?
Kala, do you want to take that one?
Well, I mean, first of all, you do need to know who your customer is, which is, where authentic comes in, and you need to know that, and that's just key. It's a requirement. But the travel rule is also very important because you need to be able to manage sanction risk, and sanctions nowadays are more on a individual level. So you need to make sure that the individuals that you're transacting with are not sanctions individual. The KYC part of it helps you do that for your own customer, right? So avoid that your own customer is not a sanctioned individual. And then travel rule is really important, particularly now in the current global situation. It's very important to be able to make sure that you as a business is not, you're not going in interacting with sanctioned individuals.
Got you. Thank you. If we go into KYC, if we explore KYC a little bit more, Keisha, how has KYC or eKYC evolved over the past years? What kind of trends have we seen over the years when it comes to KYC?
Yeah, absolutely. Actually, that's my favorite question. So we can write a lot of books about this. I don't think this webinar would not be enough, but I would say it's all starting with the manual verification. We all remember how did it start when I arrived to Berlin, I think 8 years ago. In order to get up for Drive Now, I had to go physically to the office and make the KYC be verified, and then I got a letter actually that I've been verified. And now you can verify yourself, for example, with Authentic, in 35 seconds instantly. And this is done by AI, really, not a manual intervention. So really, from the manual KYC check, that the cost from 100, depending how, but in general, the cost is between 50, it was a few years ago when we were checking the pricing, the manual verification cost between 50 and 100 pounds per person, because you need to add the time of those people that they will be doing the check, etc. Until now, they were just below €1. And you can really think about the time. That's very important. I've been waiting 4 days until I got actually been verified. and I could not use the platform or service. I had to wait until I'd use it. And now with everything what is happening on the market, it is extremely, extremely important to be able to use the service instantly after you register. You as the business, you don't want to drop down from the process. You don't want to drop down your customers. You really want your customers to use any platform instantly. And there also like a amazing like a technology that goes behind it, like all the AI, like for example at Authentic we read also NFC chip that's on the passport. So during the onboarding process enough if you like attach your phone with the passport and we read the NFC chip from it. There are really a lot of techniques. And what I also wanted to say, and then comes the liveness detection as well. So it's really the algorithm that checks whether you are a live person or not. They are still semi-manual and semi-automated verification when you have the video call, for example, in Germany, but I will come back to that later on.
Amazing, thank you. 30, like you mentioned, 38 seconds, that's how much it takes now for a very quick KYC. That's fantastic. No. And how, or are there different types of KYC depending on what customers require them? And do you have any examples of different KYC processes or procedures for different?
Absolutely. So it's all depending really on the industry. If you have a regulated industry, you need to let's say like in the crypto, right? We are talking about the crypto now. You need to perform also AML services, and then in certain cases AML and transactions, but in general the full KYC plus AML. But we have also clients like a dating company that mentioned in the past that it's only, for example, the liveness required, or like a not full KYC, but just, for example, the age verifications. We have like a gambling companies where they don't care what's your really like whether like what's your I don't know, address, or how do you look like, as soon as like your date of birth is above 18 years old. So this is absolutely the different way of KYC. All depends on, first of all, on the industry that you do that you onboard with the service, and then of course it's regulation in the country, right? Because there are also like a regulation that you need to take in account by using the service. So for example, I give you like a small example that in Germany, in order to use the SIM card, to register the SIM card, you need to have the video call with the person. And in, let's say I went recently to Dubai, and it's just enough if you provide the your phone number. So it's a regulation by regulation, right? And in Germany, you need to do the full KYC in order to use the SIM card, for example.
Absolutely. Okay, perfect. So like you said, it depends on what industries or what the actual customer does. But how can you build, what kind of best practices, or what are the key benefits when it comes to building a successful KYC program for a customer?
So I would say, first of all, you need to understand really the industry. So now we're working very close with the crypto industry, and first of all, we understand what those subjects needs in terms of, for example, the technical requirements. So first of all is obviously the speed. Precisely if they launch, they want to really have something that allows them to do a lot of verification at a certain time. So the speed is number one, but and also the most important is also the security. You don't want to compromise, obviously, the security. With Authentic, you don't compromise the security. Within 35 seconds, we really checked all the details of the documents, and every time Morse code, I would send much better if the person that sits in the front of you and check that as well, because you have direct access to the database. But what I also wanted to say, it's, as I said, it's depending on the, first of all, you need to understand the industry very well, what the industry needs. Like, for example, I don't know, like the KYC sharing or the ongoing AML monitoring, that's a must, for example. And on the top of that, I would say it's also the regulation, because this depending where the company is based on. So as again, another example, I can tell you that in order to perform services in Turkey, for example, you need to have a servers based in Turkey, right? Because you need to keep their data privacy precisely in Turkey, or the same happens to India, let's say. But in Europe, that's not required, because it's a European Union. We have a server based in Germany, and we can perform services, I don't know, in Austria, in Poland, you know, and it's not required. So first of all, it's extremely important to understand the industry, the needs, and then also the regulations in the region.
Industry needs and regulations, gotcha. And you know, there is a lot of not concerns, like, you know, people are not comfortable yet, you know, when it comes to KYC, especially when it comes to crypto. You know, people get emails saying you have to KYC, or, you know, there's the risk of your account being blocked. I mean, what do you say to that? Like, how do you entice users to kind of, you know, share their personal details, you know, especially in this new industry? You know, because at the end of the day, like, one of the advantages of being in this, you know, in crypto is the anonymity that it offered. But, you know, people do feel that that's taken away from them. What do you respond? How do you respond to that?
Okay, so I always said, like, there are two answers to the question. So first of all, it's all about the business, really. The very important is that everything that concerns fiat currency, for example, it has to be somehow regulated. That's number one. And of course, like in crypto, it's one. But then, for example, when you want to cash them, you will cash them with the regular fiat currency, and then you need some sort of KYC. But what I wanted to say, that the most, like, we don't really deal with the end user, we deal with the business. And it's very important that you, as the business, you inform the users about the KYC, the onboarding process. You, as the business, you want this process to be as smooth as possible, as easy as possible, and you want this process to really be informative for the customer. So the customer, by using your platform, knows that this would be required, but then also it's extremely important to know where the data will be storing, and how this person could, for example, like delete the data, or if they want to not use the service, what happened with the data. Those, of course, like a privacy policy should be visible on the business platform, right? And you, as the user, I always advise everyone, because my background is in law, so as a lawyer, okay, I maybe not tend to read all of those terms and conditions, because that will take ages and ages, but I always advise everyone to read the terms and conditions, precisely if it's concerning the data privacy.
Amazing, thank you. And you know, does different jurisdictions deal with this data privacy in different ways? Like, you know, do you find implementing KYC in other jurisdictions to be challenging because of data issues or any other issues, or even like sanctioned countries?
Yeah, of course, sanctioned country now is a super hot topic in terms of, like, for example, Russia, right? So that's why I think it's super important to have an option once you're a business for whoever provider you go with, for the ongoing monitoring, because that's change, right? And so that's that's extremely important. But also, like, again, like, we are based in Berlin, Germany, and as an example, I can tell you that this is a very particular country. In order to verify yourself for regulated or not even regulated services, like as I mentioned before, the SIM card, you need to have the video call, which I recently had actually by using one of the exchange platforms, and there are a lot of very weird behaviors going through this verification process. Like, you need to stand up, you need to do like this, or like you need to move your hands around, etc. So they are verifying the liveness, right? And that's because the regulation, like in Germany, you have a BaFin. It's probably requires that. We don't do the video identification, so I'm not really sure whether that was a must or that was an additional secure level, but obviously there are certain regulations that you must comply with. Like Germany, it's really like a very particular case. In general, in that region, it happened in the past that you need to have the video identity code. Now that's changed, but you still need to receive some sort of like they call it not approval, that's a wrong word, permission to perform services from the regulatory bodies in the, let's say in Austria, which we recently got that permission. But yeah, as I said, it's all depending on regulation. Like in for example, United States are much easier, and people, for example, are more not educated, but they are willing to provide with more details of their personal data, while in Germany, they're very particular about sharing that personal data. So it's also very much depending on the country and on the level of the educating people in terms of what will happen with the data privacy and what will happen with the data itself.
Absolutely. Yeah. And then, speaking on regulators, do you follow a particular regulatory watchdog like FATF or Mika, and how do you keep up to date with them, and what kind of relationship do you have with them?
Yes, of course. So extremely important for any organization like ours is to have a chief compliance officer, because at the end of the day, you really need to, it's hard to keep up on everything, but there are obviously few regulators that we checked on the not daily basis, but we checked often what is happening. Like in Germany, for example, is BaFin. In Austria, it's FMA. In Switzerland, is FINMA. But also, like in the United States, you have SEC, obviously. You have FDIC, Federal Deposit Insurance Agency. Then, of course, in the UK, which is very important, is FCA, Financial Conduct Authority. But we obviously have like a newsletter lists that we keep all that information, and we are in kind of like our Chief Compliance Officer, Runar Carlson, with more than 35 years of experience. He had a lot of knowledge in this compliance and security space. He was responsible for implementing KYC passports into Iceland and Norway. And he is the one really that keeps us updated on everything that's happening.
Fantastic. So
it's extremely important. Chief Compliance Officer, it's like a key person in an organization like ours to make sure that we comply with the latest regulations.
Fantastic. And yeah, before we move on to travel, Keisha, like what, you mentioned earlier about the various technological advancements when it comes to KYC, especially with the use of AI. Do you see that kind of progressing in the future or being disrupted by other technologies, especially with ransomware and hacks and things like that? And what kind of initiatives are there to kind of protect that data from the customer?
Yes, absolutely. So I would say, obviously, they would be disruptive new technologies like, I don't know, let's say liveness detection. We obviously check whether you are a real person, Rohit is Rohit and Kasia is Kasia, with a certain AI and the video, and we check whether you don't have a silicone mask or any other types of, but the technology is evolving so quickly. It's really like, I think like the liveness detection, it might be a problem. Of course, like you have a lot of users that are faking that, because we see that as well. And then the technology is getting better and better. So you need to make sure you keep up with you're better than, like hackers. So obviously that liveness, I would say it could be like not an issue, but it could be a challenge, I would say. And on the top of that, I would say there are a lot of businesses that requires really fast KYC onboarding, lot of users, and you know, like many people were already born with the phone. You know, like I got the first cellular when I was 15 years old. So it's also like a different for the younger regulations. The younger society, it's much easier to get used to phones, etc. So they are also tend to use internet much often, and they know it. So obviously they would be using, and everything goes online, so they will be using more. So it's important that you are able to scale and you are able to proceed that data very quickly. And you're also make sure you keep that data really secure, because they are, you definitely don't want to compromise on some data breach, and that happens quite often. So kind of anonymization and making sure that data is stored secured, it should be also the priority. It should be always the priority. Yes.
Perfect. Thank you. Thank you so much, Keisha, for that wonderful insight into KYC. Pele, over to you now. Travel rules. So could you tell me maybe some of the key or core components when it comes to travel rule compliance?
Yes, of course. So one of the first things to understand about the travel rule is the reason for the travel rule. Before we even get into how you actually implement it, because I think one of the misunderstandings is that people get into way too much into the weeds before knowing what it is you're supposed to do here. And as I mentioned earlier, it's really around verifying your customer's counterparty, who they are sending or receiving crypto transactions to. That's the real key part of it. And there are a couple of things that you have to be able to do with that information. You need to be able to sanction screen the counterparty, just like you do with your own customer. You need to be able to perform AML, so be able to tie different accounts together to the same ultimate counterparty. And then you need to be able to perform record keeping. And the record keeping is there, so you have the data. If at some point in the future you get a formal request through law enforcement, then you have the information that you can provide to them. So that's the main purpose of the travel rule. So the travel rule itself has been implemented somewhat similar to the existing travel rule as implemented in banking and through traditional payment systems. So this is originally defined in FATF's recommendation 16. It's really known as the wire transfer rule. The travel rule is really a horrific word for what it is. But the travel rule is called the travel rule because the information about originating customer and beneficiary customer is supposed to travel along with the payment. But I find it much easier to understand when you're really thinking about this is about me as exchange A interacting with exchange B, collaborating there. I have verified my customer and I've collected information about the beneficiary, so I can perform a sanction screen there. Or if it's my own customer sending to his own account in another exchange, I know that, and then that's fairly easy. And then the counterparty, like the receiving exchange, they need to do the same. So really, it's a tool to be able to have the originating exchange collect sufficient information, allowing the beneficiary institution to perform two things. Number one, they need to have the information required to be able to perform a sanction screen on your customer. Number two, they need information around their beneficiary, such as a beneficiary name, so they can match the beneficiary to their customer record. And that way, it's just a check. It's actually an optimization, and it is, depending on how it's implemented, it can be done in a very secure way, very much focused on data privacy. But it's really just about those two exchanges and exchanging that. And then also a very important part of it is both sides have to be able to say, no, we can't perform this transaction because there was a sanction hit. So we can't take this transaction. So that's another important part of the travel rule. So practically what it means is when your customer wants to withdraw funds, you need to have some way of figuring out who is the exchange on the other side. And that's not always easy because there isn't really a universal phone book for who's behind a blockchain address, but our integration with CoinFirm helps out with this, for example. And if there has been activity on an address, CoinFirm is able to typically identify the VASP or exchange behind a particular address. So that's one first part of it. So you need to gather all the data together. Next step is you need to be able to trust that counterparty exchange, that beneficiary exchange. So this is what I talked about before. Trust is a really important part. So there's this counterparty due diligence of the exchange. So you need to figure out, the main two things that you need to figure out through this due diligence is, are they likely to have performed KYC themselves on their customers? Are they doing a good job on that? Second, can I trust them with my customers' data? So these are two things, that's kind of the decision-making process in general on that particular point. Finally, now you need to be able to actually communicate with that exchange. And that's where most of the focus in the industry has been. But equally important are all of these steps that happens before. And then finally, you have to make decisions based on all of this. And there are a very strict set of decisions that you have to make for each transaction based on both national requirements and from the FATF recommendations themselves. And to be able to do that, you need to be able to set up, in most cases, some form of automated rules, or it becomes a compliance nightmare. So there's a whole bunch of different aspects around the travel rule that's not strictly speaking around, if you just look at the implementation details about what you do for travel rule, there are all of these other aspects around it that we look at as operational compliance aspects that companies have to work on before they can even perform a transfer.
Perfect. Thank you. That was it's a lot of points there, Pele, to take in, but no, that was very well explained. What are like the rules and requirements, especially when it comes to the guidelines? What do they say about VASPs, especially when transacting with like hosted and unhosted wallets? How can we be compliant in that?
Yeah, so it's relatively simple when it comes to hosted wallets and hosted. Just to clarify the terminology in here, hosted wallet means that the keys are held by someone, by an exchange or by a regulated. Well, in theory they should be regulated, but by some institution who's holding the keys on your behalf. It's also known as custodial. So there are many different words that them all mean the same in this space. And then the other side is unhosted or private or non-custodial. That all really mean the same thing as well, where the end user has control over their own keys. So this is kind of the prototypical foundational use case for crypto is, you'll often hear, not your keys, not your Bitcoin is a common term that you hear in crypto, and it's a really important use case to continue to support. So you do need to figure out if a customer is sending funds to a custodial service or non-custodial service, and there's been some fears over some regulations. So, for example, the EU are rolling out new regulation. There was a question around this. I saw around a fear of refusing to transact with unhosted wallets. So we'll see what actually comes in the final text in here, but in reality, it's not that difficult to do. It's a new process companies have to do, but for example, here in Switzerland, companies already comply with this today. And it's not that difficult to do. So there's been a lot of noise about the EU trying to ban non-custodial, and honestly, they're not. They're just You just need to set up these new processes to deal with it. And the way that we look at it is the best way of doing it is at the particular step when you're identifying who's behind that wallet. If it is a VASP, and you now need to implement the travel rule, or if it's not an exchange, then confirm that this is indeed a non-custodial wallet. And you can do that very quickly. We have a solution that most exchanges could implement very quickly, and it takes about 5-10 seconds for a customer to do. So it's not really a hard thing to do. It's just a new process, and any kind of new process, you know, always institutes some level of fear, understandably so. There's more friction for users that people have to go through, but there are actually also benefits to users. And I think this is one of the things that we don't really look at as much when we look at the news. So travel rule has, and identifying non-custodial wallets. It's also, but I mean, the regulation is about sanction screening, those kinds of things, but it's also really helpful to your customer that they know where they're sending funds. And that's one thing that we kind of forget often in the industry. Customers are typically not happy sending large amounts of money to a random cryptographic address. I've been in the space for a very, very long time. I'm scared every time I withdraw funds from an exchange, entering in an address, that someone messed it up, I messed it up, someone was hacking, you know, whatever. It's a very nerve-wracking thing. For most end users, they would also prefer being able to send to, you know, to, like if I'm transferring from one exchange to the other, I'd like to know that I'm actually transferring to my account at that exchange rather than a blockchain address. And these are some of the benefits we can actually start pulling out to end users as well.
Fantastic. And are there any deployment challenges, you know, when it comes to implementing the travel rule? You know, can you maybe give us an example of a few?
Yeah, so I think probably the most complicated part of the travel rule is that you need to change a lot around the current way that your exchange operates. And no one likes to introduce extra processes. No one likes to introduce new UX, new background processes, new compliance tasks. Then you may have to hire more compliance people in here. It's just the reality of it. It's not easy to do, which is why we've focused more than anything on actually simplifying all of these operational tasks that I mentioned before. Because before, you know, there were particularly security related things that you would do. You check coin firm when you're sending out a transaction. There would be a few checks, but now there's a lot more checks that has to be done and a lot more decisions. So it's not necessarily easy. It's all doable, but it's not something you can wait for like last minute to do, or you will not be successful. So we really recommend people start early on the process.
Okay. And why do they call this like a sunrise issue? Like, you know, where did that term come from?
Yeah, the sunrise issue is an operational issue at the moment where, you know, Singapore, for example, Singapore and Switzerland were two of the first jurisdictions that implemented the travel rule. US has actually been law for a long time, but it hasn't really been enforced. So, but companies in these particular locations were being required to implement it, yet none of their counterparties were implementing it. So this is what the sunrise issue talks about. It's the sun rising. The sun meaning the legislation, the regulation rising over the earth. That's kind of the whole idea on it, that it doesn't cover the entire globe at one point. So this has always been an issue with the travel rule, because to implement it completely, your counterparties also need to implement it. So there are kind of two things that are happening on this right now. So we speak with lots of regulators, and we are constantly pushing for a phased approach as being the most realistic way of doing it, that allows VAS to take an operational approach to rolling it out and not requiring necessarily the full back and forth check between two exchanges, which makes it actually relatively easy to implement. The second part of it, we are seeing more and more jurisdictions actually requiring requiring it right now and requiring it in a strict fashion. And now this is also changing the conversation a little bit, where in the past, it was always like, when is my regulator going to start implementing the travel rule? Now the conversation is even more about, when are my primary counterparties regulators going to implement it? So as an example, South Korea implemented the travel rule. It's a requirement from last Friday, from the 25th of March. And anyone sending transactions to South Korea, you won't be able to send transactions to them unless you implement the travel rule. So if a lot of your transaction volume relies on South Korea, you have a problem. And this now we're actually seeing as being more, adding more urgency to it, because a lot of regulators have said, yes, you have a year to implement or something like that. But now there's actually a lot more urgency in doing it, because it's starting to affect the business.
Great, thank you. I just want to touch on the FATF guideline, like you said, recommendation 16. Can you perhaps tell us a bit more about the threshold limits and the originator and the beneficiary information that needs to be recorded and shared? Is there?
Yeah. So FATF in their recommendations, they have a threshold of around $1,000 or £1,000 or €1,000. These are just recommendations, though. What actually the important part of it is the implementation, the national implementation. Like the EU, they have just the latest proposals that we've seen. I believe there's a $0 threshold on it, and we see that in quite a few other jurisdictions as well. And the actual data that you have to collect, rule of thumb is, what would you need to sanction screen a customer? That's roughly what you need to send along with it about the originator, if you're the originating exchange. But there are some specific guidelines on it. So originator name, it could be address, national identity number, something like that. A lot of the rules here are fairly localized, and we believe the best way of implementing it is where you don't just look at your regulation, but your counterparty's regulation, because they're the ones you're supposed to collaborate with. So if they need some additional details, it's good to be a good steward and kind of provide that aspect of it. And that's something that we do in our platform, where we help reconcile some of these differences that are there.
Gotcha. And as the need for travel rule implementation increases, would you say interoperability is a big thing to consider, especially between travel service providers? Or?
Yeah, interoperability is definitely something that's an issue, but I think the right approach to look at it is reachability. Can you reach the exchanges that you need to reach with? That's really the core part of it. And there's been many proposed protocols out there, and we're working with many of these protocols, but unfortunately, most of the protocols are not live yet, because they haven't necessarily solved the operational aspects of it. So we're working to push these protocols forward, because we're not trying to own the communication method in here. But what we are trying to do is make it operational for the companies who have the requirement today, and have them reach the largest amount of exchanges. So right now we typically do transactions between 60 to 70 exchanges on a typical month, and the number's growing. Another thing to look at, which is also, if you look at interoperability, interoperability is a way of getting reachability if there was something to interoperate with, which has been the problem. But the other aspect of it is the success rate, because to implement travel rule correctly, you need a response from the counterparty, which is why also we're pushing for a phased approach as much as possible. But we're really trying to focus on getting the response rate up, because realistically, if companies want to implement this for all of their transactions, we need something in the 95+ success rate. This is one thing, again, where many of the solutions, they haven't been able to get more than single-digit success rate on this, where at the moment the figures for last week for us are about 60%, which is good, but it's not great, right? So we're constantly working with the industry and pushing this forward. To be able to get it higher, we need more companies interacting, at least to respond to transactions. So this is one of the things that we're working on within our product, where we're really trying to reach out, getting this response rate up, getting the reachability up, and then ultimately also lowering the latency of a transaction, because we don't want this to slow down our customers' transactions. But at the moment, it will. And the only way it's not going to do it is if we kind of work together as an industry to actually respond to transactions, work together, collaborate on this. So this is, again, another area where our team is really doing a lot of reach out, education, helping companies get integrated, operational, to be able to number one, increase reachability, number two, lower the latency rate on it. So it gets to a point where it's not an issue anymore.
Perfect, thank you. And then could you also maybe, before we move from travel rule, give just tell us about the upcoming deadlines to adapt travel rules. Do you have any information on that for different jurisdictions?
Yeah, so many different jurisdictions have, there are many different deadlines coming up. There are, as I mentioned, South Korea was 25th of March, and we have several deadlines coming up in April around the world. And June is Estonia is coming up in June. They've moved the deadline up to deal specifically with sanctions, with improving the sanction screening aspect of it. Canada, I believe, is either April or May. Unfortunately, my apologies, I can't remember the exact dates here. I should have been better prepared on this. And we're seeing several other jurisdictions in APAC also having deadlines in this period. So it's really getting important to do right now. And again, if you have any transaction flow, if there's a significant part of your transaction flow going to any of these jurisdictions, you need to figure out how to implement it.
Perfect. Thank you so much for that. Now, I've have some questions for both of you, Pele and Keisha. Data protection. Now, what kind of steps do you take to ensure that customers' data are safe, and especially in line with GDPR rules and things? So, how do you guys, focus on that?
So, for example, at Tech, we built our application and based on privacy by design. Maybe I'll go step back. How actually Authentic started? We wanted to create a self-sovereign identity on blockchain, and that was 2017. And then in 2018, 18th of May 2018, the GDPR came into effect. And that's the very memorable day for all of those people that they had to deal with tons of documents. And that was also the turning point why we at Authentic, we changed the database from blockchain to really a conventional database that is in Frankfurt. The reason for this was obviously a data privacy. Many customers were afraid of how the data will be stored, that the data will be there forever, that they cannot never delete the data. Now it's much better, but a couple of years ago, before doing the business, you had to educate people what happened, and nobody knew what will happen. None of the lawyers also knew what will happen. I think we were one of the first company in Germany that did like a 50 pages assessment about, like a GDPR. So we really take privacy very seriously. Of course, we deal with a lot of data. That's why we decided for now not to use a blockchain for that reason. And on the top of that, we try to we used really like the servers located is very important, where also the server is located, in which part of the world. For us, we have it in Germany, And it's also that is very, very important for like crypto companies, that they know that if something happens, this is a very regulation, and where your company based, it's, I would say, one of the key factors of choosing the KYC provider. Really, I found out that just few weeks ago by talking to many crypto companies that they're doing the launching, and whoever's here from the audience is going to do the launch and choose any KYC provider, please promise to me to make sure you check where the servers is located. It's very, very important, and which type of the regulations you have involved with, and read the privacy policy as well.
Great, thank you. Pele, do you have anything to add?
Yeah, travel rule is a little bit of a tricky one when it comes to GDPR, and actually most of the world has copied GDPR in many aspects of it, so it's not just a GDPR issue anymore. But the reason why I say it's tricky is because the travel rule literally is implemented by exchanging PII between two parties. So you may have your data requirements that you have in your country, but you have to actually share the information with someone that could be in another country. So this is one of these tricky decisions that you have to make as part of the due diligence process. Can you actually trust them with this? Now, GDPR actually has exceptions for just this particular purpose, but we do always recommend that you make sure your customer understands it. You ask them as part of performing a transaction, let them know, so they can provide consent to this. Always do the right thing when it comes to this kind of thing. I don't think it's a good thing to hide this information away from the customer. And always really think about it. Where is your data going on this particular area? But you are allowed to do this using GDPR, particularly if you include it in your terms of service and your privacy policy, those kind of areas. So it's something that you may have to go in and bring up to date. The good thing, though, this is not a new thing, because banks have had to implement the travel rule, and payment providers have had to implement the travel rule for a long time. So this is completely known law. This is not some new thing that came out of nowhere. So there's already processes and legal process around this and tying it into GDPR. But it is something to think about, because it's not always obvious that it's even allowed to do this. But there are very specific exceptions to GDPR, and the best for handling this, and the most important aspect of it is, well, the best way of doing it, notify the customer, obtain their consent, and ideally include changes in your terms of service and privacy policy, really specifying that. And you'll see, if you look at your bank's agreement, there's a whole section in there governing travel rules. So that's something to look into, again, so you're not surprised around that.
So it's all about reading those T's and C's and being transparent with your customer.
But also, when you make important update in your privacy policy as the business, you have to notify the users as well within a certain period of time, 30 days. So it's very important for businesses that they implement any changes. They have to notify the people, so they still have time to, for example, withdraw the consent if there is needed, right? So I would say there are obligations from, of course, both you as an individual to read this well, to understand what happened, as Pele mentioned, with the data, but also you as the business, you need to make sure you inform the users well in advance.
Got you, absolutely. Before we go to the audience question, just want to know, how can we prevent the bad guys, or the bad actors, involved in sanctions evasion, especially through KYC and travel rule? And, what are some of the consequences, like penalties, fines, for not having KYC or travel rule in place?
So from my perspective is that it's a holistic answer to that question, how to really, we can talk about this. The only way I can tell you, it's from our perspective, right? And then, me as the kind of the individual using any sort of exchange platforms, and I use a couple myself personally. of course, like I choose the one that it's one of the famous one and implement some sort of KYC. And that would be number one for me. Like if any user comes to choose any like exchange platform, I would definitely check that the way they do the KYC, what information they're storing, and also where they're based. So that would be very important for me. It's really easy to implement the KYC, honestly. Like for example, with Authentic, it takes 1 to 2 hours just to implement our solution. And it's not also in terms of the cost. It's not really like a major cost if you compare. As a business, they are not much, we do everything for you. So as a business, it's all matter of the willingness, you know, like last week we went to World Blockchain Summit. And then we had many customers coming to us and saying like, you know what, we'll be doing launch, but we need some sort of KYC, but I don't know what to do. So can you a little bit educate us on that one? And we would like to also do some kind of education for crypto companies, what to do in terms of the regulations, some like a newsletter, some actually doing this, but to even more a certain like extent that we would be educating people how to do it in terms of the regulation, how to implement the process, what happened if you don't implement the process, etc., etc., etc. So education is number one, and then there is a lot of also like providers available on the market. It's it's really easy to pick one, and I would say that it's all about the willingness, really. It's also your reputation. You don't want to be like you want your customers to feel secure, and you definitely you want your company to be reputable on the market. So you don't want to have any data breach or anything, you know, like a bad players using your platform.
Amazing, thank you. And it's great to see that, you know, you're prioritizing customer education as well there regarding how they can
start with that always.
Thank you. Pele, anything to add?
Yeah, so when it comes to things like sanction screening, I think we're at a really interesting point right now in the crypto industry, because the crypto industry for a long time has been forced into this catch-up situation with more traditional payment systems or traditional financial systems. But with this combination of better KYC, blockchain analytics like CoinFirm, and now the travel rule, we're actually in a position now that we can do much improved sanction screening and targeted individual sanction screening than traditional payment system or than traditional financial institutions can, because there's that on-chain visibility that CoinFirm brings into it, you know, interactions with risky addresses. Then travel rule brings in, brings in information around the counterparty to a transaction, so you can actually do that sanction screen on them, and then you can tie all of this together. Obviously, the important first part, right, is the KYC process that you have within your own business, within your own customers. But now you're in this position, and it's exciting right now, because we can now start telling the story to regulators that crypto is actually better and safer going forward than the traditional systems. And you know what? We're hearing this from them as well. So once travel rules implemented, once you're performing proper sanction screening within that, once you got your proper blockchain analytics set up, once you got all of these things done, you know what? We are better and safer as an industry than any financial services, other financial services industry in the past.
I agree, 100%. Yeah. This is because everyone is like, yeah, crypto, you're really tightening up, but to be honest, like commercial banks, they don't have sometimes even some sort of like a KYC. So yeah, obviously, 100% I agree with you, Paula.
Gotcha, thank you. Yeah, before we answer take a couple of questions, how does blockchain analytics kind of fit in here with travel rule and KYC, especially when combating money laundering and terrorism financing?
Yeah, so yeah, I can take that. So the way that we do it, we use our CoinFirm integration for two things. First of all, to see if we can identify the exchange behind a particular blockchain address, which makes it easier to implement the travel rule. The secondary part is that we pull in all of these different data sources, including data from CoinFirm, data from sanction screening tools like Comply Advantage or Refinitiv WorldCheck, and risk scores that are generated from you guys around the address. We tie all of this together, including information around the regulatory status and other data around the counterparty VASP. And we are able to tie all of this together, let you set up automated rules combining it. So it's no longer all of these separate silos with different decisions. You can do it now at the point of transaction. And I think this is just really powerful. And again, this is one of these places where now we have the tools to go far and beyond what the traditional financial services industry has, and we can show them. And we're obviously also working with companies in the traditional financial services space who are looking to get into crypto as well. And they can see now that, it's changed. It's not like the old days. This is actually a better place going forward. And this is going to help drive crypto adoption forward. And this integration with blockchain analytics, and then the real world aspect on getting the name and the counterparty, which is what we do, is very, very important.
For us also, I absolutely understand that KYC is just one piece of the puzzle during the entire onboarding process. You really you need to have different aspects as well in order to make this process very secure. So AML is one of those on individual. AML on transaction is something really like an extra value added to the onboarding process, but also it's extremely important this passive biometry that we didn't also mention in the past. So during the onboarding process, it's important to verify some like a fingerprints. So we're able to verify whether your SIM card is like a stolen or it's copied, or whether the remote desktop has not been installed on your machine. So there are few components that makes, as Pele mentioned in the past, the entire secure process. And so it is much more secure than, as I said, like a commercial bank. So commercial banks, they don't do that to that certain extent. Yeah.
Thank you so much for that. And yeah, we really appreciate your work with CoinFirm as well. So let's go on to questions. Because of the lack of time, we can only have one. The question is, which jurisdiction have the most stringent KYC and travel rule requirements, and which should be tightened? I think
this question is really not for 1 minute to answer, right, Pele?
Yeah, I mean, you can keep it brief.
So, okay, so just briefly, one of the strictest regulations are, for example, in Germany, that's what I mentioned in the past, because they still require some sort of the manual verification, and even like there are certain businesses like gambling companies, online gambling companies that, according to German regulation, they require also some sort of AML check as well. So like that's, I would say, the one of the like an example, but they are it's hard to answer in 1 minute. I have a time pressure now.
Yeah, I think when it comes to travel rule, probably the strictest jurisdiction right now is South Korea. Singapore is also pretty strict. Within Europe, Switzerland's probably the strictest, but we're seeing Estonia implementing very strict measures by June, which is definitely an important one to keep an eye on.
Thank you so much, guys, and that brings us to the end of the webinar. And I just want to thank you again, Pele, Keisha, for your time and for being wonderful partners to CoinFirm as well. And thank you all to those who attended today. And we'll be back with more webinars like this. Thank you once again, and goodbye, good afternoon, good morning, wherever you are. Thank you.
Thank you very much, Rohit. That was a pleasure. Thank you, Pele, as well.
Yeah, thank you to you, and to Rohit as well. Thanks.
Thank you. Bye-bye.